Is Bitcoin still too risky and speculative, or should you consider holding it as a piece of your investment portfolio? Well, in this video, I'm going to share with you some data on what the modern portfolio theory is, what risk-adjusted returns are, and how Bitcoin would fit into an overall investment portfolio to actually increase the expected return and actually decrease volatility as well. Now, I've spoken to over 500 accredited investors over the past 3 years, and what I've realized is there's kind of this line drawn in the sand, okay? One, investor will say, this whole Bitcoin crypto thing, it's too risky. I don't understand it. It's too much volatility. I don't think I should hold any of it, okay? I think it's stupid, right? Then the other person is so bought in and sold that this is the future, and they don't even ask any questions, and they're like, yeah, just like, let's just like allocate 10%, 20%, 30%, 50% of my portfolio into Bitcoin and crypto. Now, this video is aimed towards the person that doesn't even understand why they should have any sort of allocation into it. So I know I've seen this with dozens and dozens of investors I've spoken to. I've seen this with my parents. I've seen this with pretty much everyone over the age of 60. So if you got someone in your mind that you're thinking about in your head because you've spoken to them about this concept, send them this video so they can start to comprehend why maybe Bitcoin may be a decent asset to have in a portfolio. Now, realize this is not investment advice and not your financial advisor, but what I am is a guy on YouTube sharing some data. All right, so the modern portfolio theory is really just a method for diversifying a portfolio that maximizes returns without unacceptable levels of risk, okay? And how you create the highest expected return is by having uncorrelated and negatively correlated assets. So when one asset price goes down, the other one's going up, and you can over time have a lot higher expected return by not having too much concentrated risk in one asset class or the other. So you can have a really nice mix of assets. You could have bonds, you could have stocks, you could have real estate, commodities, and Bitcoin. And we're going to show an example of this here actually right now, where a regular 60-40 portfolio. This was typically, what financial advisors would recommend. That's the most, efficient portfolio to have, is to have 60% in equities or stocks, and then 40% in bonds. And that caused a really great expected return in a portfolio because it was well diversified. So if you talk to a regular financial advisor over the last 15 years, they know exactly what a 60-40 portfolio is. And I want to show you some data, and I've seen many, many studies on this. This one is specifically from Bitwise. I've seen ones from JP Morgan, all different types of banks. All right, so if you just had a well-diversified portfolio from 2014 to 2020, a 60-40 portfolio, 60% equities, 40% bonds, the return would have been 26% from 2014 to 2020. All right, now if you would have just put 2.5% of that portfolio in Bitcoin, okay, that would have increased from 26% to 45%. All right, so just having 2.5% Bitcoin in that same portfolio, that same 60-40 portfolio, you would have had a 45% return instead of a 26% return. Okay, now if you would have had 5% of Bitcoin in that portfolio, in that regular 60-40 portfolio, you just partition off 5% of that, it would have taken it up to 65%. All right, more than a double in the return of the portfolio. And actually, there's data to show that also decreases the volatility in the portfolio. Everyone thinks that just having Bitcoin in a portfolio is going to just smash the volatility in the portfolio. Well, actually, it has been proven to not only increase the return of a portfolio, but it has also decreased the volatility in a portfolio. Now, obviously, it depends on what you hold in your portfolio, what portion you have, partitioned out to different asset classes, and what, time period you're looking at. But every, study that I've looked at that's just included a small amount of Bitcoin in a portfolio, it has actually increased the return, more than doubled the return, at least when there's at least a 6-year time horizon, and actually decrease the volatility in the portfolio. Now, another thing you want to look for, if you're just looking at individual assets, is you want to have risk-adjusted returns, right? So you want to look at a return of an asset, but also factor in, okay, what level of risk am I taking on that asset? Now, you could have really high returns, right, on like a meme coin, okay? but then you can be taking way too much risk. And yes, you might get lucky on one, but if you invested in the other 1,000 meme coins, you would have gotten demolished. So understanding that you're looking for, when you're picking out an individual asset, how does this fit into the portfolio, and does this have a higher risk-adjusted return? And one way to do that is to look at something called the Sharpe ratio, which is what we're looking at on the left here on the y-axis. The x-axis is obviously time here. Now we're looking at Bitcoin, Ethereum, gold, U.S. stocks, U.S. real estate, bonds, and emerging currencies. And you'll see that Bitcoin was over a 4 on the Sharpe ratio. Anything over a 1 is actually really good. So a 1 is right here, all right? And you'll see that Bitcoin still has been this entire time period from 2014 all the way up until now, has higher risk-adjusted returns than every single other asset class here. Even U.S. stocks, even U.S. real estate, Ethereum and Bitcoin have been kind of battling it out, but Bitcoin's still been on top over the past, since they started tracking this since, late 2019. So this is something that you want to look for, is understanding, hey, what's the Sharpe ratio of the assets that I'm putting into my portfolio? Because that helps you understand, okay, am I actually getting a return that is a good return relative to the amount of risk that I am taking? So you want to understand risk-adjusted returns when you're picking specific assets, and you also want to understand modern portfolio theory, and hey, does an asset like Bitcoin actually make sense to put in a portfolio? And I know that over the past few years, a lot of banks and well-respected financial advisors, hedge fund managers, things, they always used to hate on it. Okay, well, we've seen even JP Morgan come out and say it actually is pretty prudent to hold, at least 1% in your portfolio. We've seen Ray Dalio say that as well. We've seen, Stanley Druckenmiller, Paul Tudor Jones, some of the most prominent hedge fund investors, hedge funds and investors of all time starting to allocate into this asset class. So just some things to consider. Let me know what your thoughts are in the comments section below. Do you hold Bitcoin? How much Bitcoin do you hold in your portfolio? I'd love to hear that. I know that I'm in growth mode, right? So I really believe in this asset class and in blockchain becoming something really big and impactful. So I am definitely allocated more than 5% exposure to Bitcoin and crypto. But I'd be curious to hear what your thoughts are and appreciate your viewership. If I do produce good content, I would appreciate you hitting the subscribe and supporting the channel, all right? Can't wait to see you here on this next video.